Ladies and gentlemen, welcome back to Money Focus with Alexforbes. So you know how big the conversation around the two-part system has been. And so we're continuing that conversation, and I'm speaking to Elbie Pretorius, a financial consultant at Alexforbes, to dive deeper into it and give us more insight. Elbie, how you doing?
I'm fine. Nice to be back. Thank you.
Thank you. So now let's talk about, the 1st of September is when the two-part system, really came into fruition and kicking.
Okay.
So how will my contribution towards my retirement fund work now? So what's the situation? What's changing in that regard?
Okay. So your contribution towards your retirement fund will be split in two.
Okay.
1/3 of your contribution will go into a savings pot that you can access. That is the main thing. And the 2/3 will go into a retirement pot, which you can only access after the age of 55 or your company's retirement age.
Okay.
So when you open your statement, you will see there will be 3 pots.
Okay.
A retirement pot, a savings pot that you can access, and your current pot that we call vested or non-vested pot.
Okay. And so when it comes to the cash, is one then able to directly access cash from that system before I retire?
Correct.
Okay.
So on the savings pot, from 1 September, a portion, maximum to 30,000, went to in your savings pot, and that was the big thing. So you could access that money from the 1st of September. The great thing of that is that while you're employed, you can access that savings pot once a financial year.
Okay.
So while you were working in the old regime, you couldn't access any money except if you resign or get dismissed or retire. But with the new legislation, you can actually access your savings pot once a financial year.
Okay.
And that's the big change.
That's happening.
Yeah.
And then when one does then retire, what are the options or what are the changes in those options that I have now when retirement comes under the new two-part system?
So in the old regime, you could only access, depending if you have a pension or a provident fund or a retirement fund, so you could only access 1/3 on your pension and retirement fund. And you can only access it either when you retire, resign, or get dismissed. But now, because people are cash-strapped, they have debt, the legislation changed, so people can actually access that money before retirement. So if you retire and you access your savings pot the whole time, what will happen? At retirement, you don't have money.
Have anything, yeah.
You don't have money to pay off your credit card, maybe outstanding home loan. So there's huge implications by just going and access your savings pot. Just think about it very carefully if you want to take cash. Don't just take it, make sure, because it will catch up with you.
Yeah.
And then the nasty thing is tax. Do you think people think they don't pay tax? But SARS will deduct tax of your marginal rate. And that's quite high. And if you wait up until retirement, you pay tax according to a retirement tax table, which is much more better than marginal tax rate.
Okay.
Yes.
So what are some of those specific products that one has, when you do retire? So what are those products like?
So it's really important because there's choices and options that you can that you need to access when you retire. So if I can give an example, you can have a living annuity where you can leave money to your beneficiaries, have a legacy, or if you're worried about the markets and you don't like the volatility, you can buy a fixed guaranteed pension, or you can do a combination of both. And it's really important to understand the pros and cons of both that options, or currently we do a combination of the fixed guaranteed pension where you have the security, the living annuity where you can have a legacy that you can leave behind for your loved ones.
The loved ones.
Yeah.
And so speaking to those people now, people maybe who are nearing retirement and are thinking about it, who may be a bit anxious and worried approaching that, what advice would you give to those people?
I think just stay on your course. You have been planning for your retirement. Don't make harsh decisions. And if you can, don't access your savings pot. Because you're near retirement, you don't have enough time to make up whatever you're going to deduct from your or take from your savings pot. And remember, if you open your statement, you will see there's a vested, non-vested portion. That's still in the old rules of the fund. So you will have that available. You have your savings pot that you can access, obviously, which we don't advise for people over than 55. and then your retirement pot, which will give you a monthly pension the day when you go on retirement.
Okay.
But again, there's options, and with options came the responsibility to understand and make informed decisions, to make the right decision, get the
Okay.
information.
And
Yes.
then another thing, and we speak about this quite often offline, is now people like, for example, me, who are far from retirement and maybe have a long way to go. What would you say to those people in terms of, so we're earning our income, but we're not thinking retirement, we're not in our 40s yet or 50s. So what would you say to those people?
Firstly, contribute as much as possible to your retirement fund, because remember, your contribution firstly is tax deductible, and from now on your contribution will be split 1/3 in your savings pot, 2/3 in your retirement pot. And if you really have a financial need, once a year you can access that savings pot, but don't make it a goal.
Constant all the time.
Yeah, a constant withdrawal. I need my money, I'm going to take it because of the tax, and also because it will catch up with you in the long run. So the beauty of a retirement product is you have the tax deduction, and it falls outside of your estate if you pass away. So there's no estate duties that is applicable. So retirement contribution is a very good investment to make for yourself going forward.
Okay, and then last one. So a lot of stress and anxiety around this. It's a lot of information. And so I often like to ask, like, what would you say to people who maybe don't have a financial background, an everyday person like myself in media? How do we navigate some of this information and acquiring that? How would we go about that?
I think it's important that you start seeing a financial advisor and go and sit down, discuss what you are saying. Listen, I'm worried about my retirement. Can I access my savings pot? I maybe have a cash flow problem. So sit down and understand the options and where you are in your life and what is your dream? What do you want to achieve with your finances? And make an appointment with a financial advisor. More than welcome to make an appointment with Alexforbes. We're based in George. Pick up the phone, come and see us. Our offices is also in George, and it will be time well spent with us. That I can promise.
Okay, fantastic. Thank you so much, Elbie.
No,
I
thank
appreciate
you.
that. So you guys have heard it, that as much as it may be worrying and anxious and, stressful, it is something that you can work through. Alexforbes is always there to guide you through the entire process, right from the beginning, again, until the end. See you next time.